Let's start with the big earnings of the day. Infosys reported second quarter numbers that were largely in line with estimates. Margin expansion was above estimates, but revenue growth missed expectations marginally. For the full year, Infosys has raised the upper end of its revenue outlook from 22 to 23%. However, the upper end of the margin guidance has been lowered from 23% to 22%. Ritu Singh spoke to Infosys CEO Salil Parekh on the earnings report and his outlook for growth. Take a look.
Mr. Parekh, thank you very much for speaking to CNBC-TV18. First, as always, on your guidance, both revenue and margin have been tightened. What is the reason for that, and what should we infer from it?
On the growth guidance, we've seen as we go through the quarters, normally we reduce the band of the guidance as we see more visibility within the full financial year. We've seen very good large deals momentum. We've seen good pipeline and a good Q1 and Q2 on growth. And there we've made the guidance in the top end. So we had 14 to 16 and now we made 15 to 16, which is at the higher end of the guidance, which gives us more confidence and visibility of what is going on within the year. On the other one, margin guidance, last quarter we had said that our guidance was 21 to 23%, but that we would be closer to the lower end of the guidance. As we've come in here for this year specifically, since we felt we were going to be at the lower end of that, closer to the 21%, in the guidance, we've decided to reduce the band so that it's clear what we are saying on the guidance. In most years, we don't change the margin guidance. We keep it the same because our aspiration, and even for next year and the future, will always be to higher margins.
The macroeconomic environment, and you've been outlining this as well, has remained challenging, especially in Europe. Could you tell us what the conversation with clients have been like? You said high-tech and telecom are some of the sectors which are seeing stress. Is that only in the European market or in the American markets as well?
So there, the environment is got many different aspects. So first, if you look at what Infosys is doing with supporting our clients, we are seeing growth in both digital, over 30%, and growth in our core services. So we have now really two engines, both of which are growing for different reasons. We see that our digital capabilities and Cobalt are extremely resonating with our clients, and our automation is also working because there are cost impact that we're having. Now that if you superimpose on the macro, what we said last quarter was the mortgages in financial services, parts of retail industry. Now we are seeing parts of high tech and parts of telecom, where some of the discretionary spend are coming down. However, we are also seeing a large deals value for Q2 at 2.7 billion.
But is that sustainable, the 2.7 billion kind of a run rate?
So there we are seeing a pipeline for large deals extremely large. Now why is that? Because the earlier point, which is both digital and cost, are both in our playbook. And depending on how the macro develops, we will see which ones will be more important for clients. And that's why that sort of point always needs multiple components, because there's no simple way for us to get that, communicate that.
A quick word on the employee addition for the quarter, around 10,000, which is slightly lower than the run rate we've seen in the last 4 quarters, at least 16,000 plus. Could you give us a sense of how we should read those numbers as well? Is it a sign of the kind of headwinds you see, or are you expecting higher furloughs in the third quarter, as usually is the case?
So, as you said, in the third quarter, there's typically furloughs. We don't see any indication of a change in terms from the past years of what the quantum will be. But there are always furloughs, so that seasonality comes in. But the recruiting at 10,000 is a very strong number. And we've already had, as you mentioned, good recruiting in the last few quarters. Last year we had 80,000 college graduates. So we continue to see that we are adding to our employee base. But we're also making sure that the macro points we discussed earlier, we're keeping that in mind.
But has the onboarding been delayed, as some reports seem to suggest?
So we have made sure that all of the campus hires that we are doing are joining Infosys. Some of the training are at different times in the year.
All right. I also wanted to get a sense on attrition coming down. Yes, it's been trending lower for the last 3 quarters, but how soon do you see it coming below 20%? And first that and then another one.
So on attrition, again, there have been several initiatives the companies put in place. I think in combination, they're starting to work. More predictability, changes in leadership development, learning. So that's what's given us this trend down.
Yeah.
My sense is we will continue to see the benefit of these initiatives, and over time that will show up in better attrition.
And we have to ask you about moonlighting. It seems to be the term of the season. Have you let go of any employees because of this, and what is your opinion on the matter? Stand, rather.
There, I shared earlier what our approach is. I think our view is, Infosys is a hugely focused learning environment company. Internally, we have for years a system that we had set up for gig work where employees can do things beyond what they're doing in their job, apply for these things. We've had in any given quarter 4,000 employees who apply for it, 600 who get it. So it's something which we're very familiar, comfortable with. It's a platform we call Accelerate.
Yeah.
For external gig work, we have got an approach where with the prior permission of our manager, keeping in mind confidentiality and contractual, the employees are allowed to do that. That we are also making the policies more comprehensive on that, so it's very simple for our employees to see it. However, to be very clear, we are not supporting dual full-time employment. So that is sort of in summary what we're doing there.
And finally, a word on your buyback. What went into the quantum and the mode of the buyback, if you could just clarify for us.
So the buyback, we are very committed to our capital allocation and return policy. The policy states 85% of free cash flow over 5 years. So given the way the buyback cycles work within the regulatory environments, we anticipated that we would have some buybacks and some dividend payouts. And in keeping all of that in mind, the quantum was developed, which the board recommended. So it's a large quantum at 9,600 crores, and it will now, we've announced it, so it will now be rolled out.
All right. Thank you, Mr. Parekh.
On that note, it is time for us to head into a short break. But coming up next, the Supreme Court delivers a split verdict in the Karnataka hijab ban case. Details when we come back. Stay tuned.